You're listening to the UAE's #1 talk radio station.
This is the Business Breakfast on Dubai Eye on One. Right, having a look at the real estate market for a little bit longer. Property Monitor tying up with a mortgage broker, Holo, to help customers get a quick valuation at the start of the property buying process. Why are they doing this? We're very pleased to be joined by Jean Jahenki, the COO of Property Monitor. Jean, good morning. Thanks for joining us.
Morning, Brandy.
So why are you doing this?
So what we're actually doing is we're integrating our AVM, or Automated Valuation Model, into Holo's digital mortgage process. So one of the main reasons we're doing it is to streamline the process, or make that process for potential home buyers a lot easier, and to mitigate some of the potential hassles that might come up during the mortgage process that center around the value of the property.
Okay, let's take the tech jargon out of it and talk about what it actually means for people. So at what stage would potential buyers get a valuation as opposed to when they'd normally get one?
Yeah, so let's look at that first process, the current process, the way that it's done, and it will still happen this way as well, is that banks require a physical valuation to be done of the property before lending against it. That typically happens about 3 to 4 weeks into the mortgage application process, right? So the start of the application process, you might not have even identified a property, or you might have. Once you have, then it goes through the process of underwriting and the background checks on the purchaser and other things, and then almost one of the last things is that valuation when the surveyor goes out into the field. And you pay about $3,000 for that. What we're going to be doing is as early as possible in the journey. So it could be as soon as you've identified that property, or even you might have several different properties you're looking at. You enter in, you select the address, you click run, and then it delivers an estimation of what that property is worth based off a whole bunch of tech jargon that we won't go into.
How much will it cost to do that?
So Holo is actually providing this in the interim part. It's a free service right now. It's a value out of their service. In the long term, there may be a cost associated to it as well.
And do people have to sign anything, agree to use Holo, put any money down?
So it'll be in their journey. So someone would go in, they'd register just as they normally would. At any point during the journey, they just click a button to go to the AVM, plug in the address or identify it in a map, and then it provides a estimation of value of the property and a nice little report to go with it.
So what nasty surprises are you trying to prevent here, Jean?
So, I mean, one of the biggest ones is that frustration that can happen if you go through, you've identified the property you love, you're looking to take out a mortgage, probably at the maximum LTV that you can afford, so you've got your down payment sorted, and then you go maybe this 3 or 4 weeks through the process to find out that, hey, it doesn't come in at what you're looking to pay. This could potentially put your contract deposit at risk, or it could at least be that you've expended that money for the physical valuation that hasn't happened. So what we're looking to do is to give that consumer an indicative idea of what that price is likely to be on that surveyor valuation ahead of time. So there's no pain for, the purchaser, the brokers involved, the lender, the mortgage broker, because no one wants to invest that time and then have the deal come up and they go, you know what, we're only going to lend on what the surveyor value is, so you're going to have to come up with an extra 5 or 10% down payment.
Has that actually been happening? Have people been losing deposits because of difference in what the bank thinks the property's worth and what the seller, buyer, broker thinks it's worth?
It does happen. A lot of the time what happens is that purchaser has to go into their pocket and put out more money against the down payment. Every bank's different as well with the valuation fee. Some might actually refund that or credit it against a future valuation. At the end of the day, it depends on the contract that the buyer and seller are signing together. You don't really see mortgage contingency clauses in those contracts here. We're in a lot of places, the US, Australia, UK. It'll be contingent on that home loan being approved by the bank. And if it's not approved, that they can back out with pretty much zero penalty. But here, unless you have that clause around one of those contracts, you potentially could be losing that 10% down deposit.
So is there a chance that deals won't go through because of this? Because people will look at the valuation and think, not so much?
We hope that doesn't happen. It's not 100%, nor is any valuation, whether it's an automated valuation or a physical valuation. It's a guideline of what the value is. So it can be used early in the negotiation process for a deal. So maybe the contract doesn't get signed for such a high price, or it just gives them that knowledge going in that, hey, look, we might need to go into our pocket. So let's just prepare that in our offer and all the other conditions that go in there.
What happens if the seller disputes your automated valuation, if they just turn around and say, no, it's not?
And look, It's not 100%. It's not going to cover every property in Dubai, and no AVM should. It gives a guideline of value. If a property has been significantly upgraded or is in an area that doesn't have a lot of transactions, just like a surveyor valuation, those things have to be taken into account, and it can have an impact on property value. So it's for anyone to dispute higher or lower with it. It's meant as a guideline that's there. It's not a hard and fast, this is exactly what it's worth, nor is what a broker's price opinion would be, or what the seller thinks it's worth, or actually what the surveyor comes back with.
Has this become more of an issue? Valuations coming in as a little bit of a surprise over the last year or so, when we've seen the price of properties ramp up. I mean, I've got this latest Collier's report. Apologies, it's not one of yours, in front of me, which is talking about prices increasing 10%, for example, in the year to June.
Yeah, so in the beginning of the recovery, when prices had that big initial bounce, there was a lot of a disconnect between what the contract prices were and what the surveyors were saying it's worth, what the valuations were coming in at. And that could be hard. It's natural. When a market recovers and it bounces so quickly, a valuation or a surveyor's job is to make sure that they provide what they feel the market valuation is at any point in time. It's tough to justify price appreciation that might be 10, 20% month on month. So we did see this in the initial part where surveyor valuations were potentially coming in under. Now they've kind of caught up with where the market is. So it's been there. This will also help. And we build this around multiple models. So it looks at this point in time, plus puts an element of what the property and the market trajectory is to give that idea of what value is going forward.
And Sean Jahenke is the COO of Property Monitor, speaking to us this morning about property valuations. Thank you very much for your time.